Good morning. Good morning from Los Angeles. Happy Halloween. Trick or treat. Let's see how this is going to go. What's going on, folks? Um, Interesting week, to say the least. We can discuss whatever you guys want to discuss. I'll be around for an hour. Go through the positions, go through some charts, do some chopsticks analysis. Maybe discuss a little bit of the Mag 7 earnings. Couple bad, few good. Apple seems like not interested. A lot of cross currents going on though. We'll talk about crypto, Bitcoin and Ethereum and Solana. What else? What else should we talk about? We should talk about Fed cutting interest rates on Wednesday again, and then Powell throwing a little bit of a little bit of his color in there, saying that December rate cut maybe not guaranteed, and market ate it. Okay, especially yesterday, on a day that I was not around yesterday. Like I wasn't trading yesterday. I had some other things to do, and it seems like when I'm not at the desk, market doesn't do well. So I'm holding the whole thing. I'm holding it all up for you all. What else is going on? Yeah, well, what do you guys want to start? Here's the link. If anybody wants to join, please do so. Keep me company. Right here. Right here. Right there. All I ask is you're at a quiet place with good internet reception. So let's start. Okay, let's start with the Mag 7s. Last week, Netflix earnings were not that good. It ate it to the tune of about 10%. The big one this week was Meta. They're spending like drunken sailors. You all hopefully realize that Meta is out of cash, but then at their level, they can do whatever they want. They have a free cash flow machine. They'll just, whatever they're getting in cash, they're just putting it into AI. We'll find out. I have questions about all of this in my mind, but then, these are billion people with trillion-dollar companies, but then I'm entitled to my opinion. A lot of folks on the internet are talking about AI being the dot-com bubble. I disagree. I don't think it's that. There is a big difference between the dot-com bubble of 2000, which I was on the desk trading and laughing my ass off every time somebody bought something. I was wrong for about 8 months. These things go on and on and on until the music stops. And when the music stops, nobody knows when it's going to stop, by the way. So if anybody tells you that, oh, this is the top, I'm like, no. But what happens is that there's the big difference between 2000 that I lived through and today with the AI circle jerk going on is this. None of the companies that are doing all that spending today are anything comparable to 2000. In 2000, you literally could have said Sergio.com and go public and stock would go up 500%. No earnings, nobody checked anything. Greater fool theory in full force. I buy it today, it's 10% higher tomorrow. Another fool will come and buy it from me at a 10% higher clip on a weekly, daily basis. That's what was going on. But it lasted a lot longer than I anticipated then. It lasted about 8 months. There are some similarities between 2000 and today. For example, there are some similarities in these quantum stocks, right? They have no revenue, they have nothing, forget earnings, they have no cash flow, burning cash. But when you look at what Meta is doing, what Microsoft is doing, what Google is doing, what Tesla is doing, these are trillion-dollar companies with massive amounts of earning power. That's the difference. Yes, there is some fluff like Beyond Meat, which I'll explain in a minute, or Open Door, or things. There are some groupie stocks, that meme stocks, let's say. But the difference is immense. I mean, you can't just say this is a bubble, it's going to burst. I don't know if it's a bubble. I don't know if AI is a bubble. I think we're in the first couple of innings of this game. How this is all going to look could be very different in a couple of years, not even maybe, right? Because there's massive amount of spending going on. I mean, trillions of dollars going on into these AI data centers. These are not stupid people, folks. These are people who built Oracle and who built Facebook and who built, amazing Microsoft, amazing companies, Google's, right? They must be seeing something. There must be seeing some sort of ROI at the end of this, or ROC, return on capital, because this capital is being spent. It's helping the economy in general, because the economy, perfectly speaking, or honestly talking about here, is not doing well. When our consumers, when you look at a stock like Chipotle, let's say, right, they're saying that the new Gen Zers and millennials and Gen Alpha is not buying, they're living in their mother's basement and they're not even buying burritos. What does that say? And you have to understand, our consumer is 75%, or our consumer spending is close to 80% of our gross domestic product, which is right around $30 trillion at the moment. And so the point I'm trying to make is the underlying health of the economy as good as the data suggests? Is the average American doing as well as the data suggests? I don't think it is, because you can go to Fred and check all the defaults that are going on in prime and subprime car loans, credit card defaults, right? So there is definitely, under the surface, things are not well. On top, above the surface, the water looks pretty fucking clean, right? Pretty uneventful. Why? Because 10 stocks, and that's another thing people are just pointing out nonstop. 10 stocks are pushing the indexes up. Yes, they are. There's no ifs and buts about that. I can't argue that fact. So my thing is, I talked about this actually on Wednesday during trading with Sergio. If generals are leading here, okay, but then 2 generals got shot. They're either injured, they're not dead. Meta and Netflix. Okay. Well, the soldiers need to lead at some point, because the generals have been leading for the last 5 years, basically. How do you know that? You know that by looking at an index like Russell 2000 and compare it to an S&P 500 or the triple Qs. Big difference, big outperformance by the triple Qs. And triple Qs are led by these 10 stocks, and we know which ones they are. So my point is, underneath the surface, things are not well. Other things I'm paying attention to is the advanced decline line, or out of the S&P 500. As we know, S&P 500 is the largest 500 stocks, market cap stocks, right? And they're weighting in the S&P 500, right, is by market cap. It's not equal weighted. If you look at equal weighted S&P chart versus an actual S&P chart, which is market cap weighted, it's immensely different. So out of 500 stocks, 450 are not doing well, or are not doing anything like an Nvidia is doing, or Apple is doing, or Google is doing. So yes, there are some similarities going back to 2000, but I can't say it's identical. It's not. This AI bubble, if there is a bubble, is going to play itself out. A lot of people are questioning the circle jerk that's going around. Oracle invests in OpenAI invests in NVIDIA invests in AMD, the circle jerk I'm talking about. So my thing, this has to play itself out. It's just time. We can make educated guesses. I do it all the time, when I'm discussing in my private circles what's going on, because people ask me about it, but I don't know. I'm being perfectly honest here, how this is all going to, how's it going to play out for society in general? Look at all these layoffs that's going on. Are these the first round of massive layoffs? And these are not small numbers, 40,000, by Amazon, or 30,000 by UPS, whatever they are. There's massive layoffs going on. And this is just not without AI kicking. I mean, AI at the moment is just kicking in as ChatGPT or Gemini, and most people are using it to ask it questions and things like that. This is not what AI is going to do. It's going to be a lot more different than our companies or corporations already replacing humans with this new tool. It seems like it. So with all these layoffs going on, with the stocks being led by just these 10 generals, is the overall health as good as it looks or it's made out to be? I don't think so. But again, I'm no fool to pick a top. I can't pick a top when the market's making all-time highs. You could be technical, you could, fundamentally, you could talk all you want. But ultimately, I do agree with the fundamentalists. Fundamentals will be reflected in the picture. And as we know, or hopefully stocks, mother milk of every corporation is earnings, is profits, is free cash flow. You can analyze it to death. And ultimately, it comes down to that. The price of the stock today may not reflect that. What it reflects is future earnings, future cash flow, future revenues, future top line, bottom line, all that stuff. So how much of the future are we pricing in today is the question in my mind. Now, for my day-to-day swing trading, whatever, that's maybe probably not as important. But overall, in my investment account, it is important. So to me, I think about it. I don't lose sleep over it. Days like the yesterday show up out of the blue and like, okay, garden variety sell off and people are panicking and stuff. I'm like, no, man, market's making new highs. How do we call a top? So all of this is, something to discuss, something to talk about. And if anybody wants to come on, the link is up there. We can talk about all this stuff. But, is America ready for this generational change? This is not the change that we think was similar to going from the horse and buggy to steam engine or the 2000 internet revolution. This is a lot bigger than that, this AI revolution. And what's going to happen? I mean, I have kids. I have a college kid and I have a high school kid. I think about what their future is going to look like. In fact, with one of my members, in our chat group, I posted a chart and he was like, I agree, I learned so much. And I'm like, yeah, but I bet, he's got a couple of little ones and you know who you are. And I said, I bet they won't even own a home or a car, autonomous vehicles. And how many thousands of truck drivers and hundreds of thousands of truck drivers are going to be replaced? I mean, there is a lot going on here, folks. So, and how's that going to be all reflected into the economy? And at the moment, not much. You look at the S&P 500 earnings, they're on target about $270 a share. Yeah, slap a 25 PE on it. We're at 6,900. Okay, fine. Is 25 PE too high? I don't know. How much of this is AI? How much of this economy today is being held up by this AI spending? A lot of it, because the consumer is not healthy. The consumer is pretty unhealthy at the moment. I have a visitor. Hold on, let's talk to the visitor. All right.
Hi, Sergio, it's Daniel.
Hello there.
Yeah, I feel you're all by yourself there. Got a quick question.
Yes, sir.
Ever since I've been 20, I've been putting money into my 401k.
Yeah.
So 7% of my check been going there. Now I'm up to more than 250,000 on there, and I have it on the low risk. And I have it divided into 4 different stocks or 5 different stocks. I don't remember last time I checked. I leave it alone. And there's days that, last year alone, I did $25,000 in the market over. So I'm just saying a roughly 25. Should I be investing in high risk? Because I don't want to lose the money.
Well, you just answered yourself right there. If you invest in high risk, your risk is losing the money is a lot higher than if you invest in a low risk. So okay. So I don't do financial trading or investment advice. Get that out of the way.
Yeah.
Depends. Number one, depends on your age. You're doing the right thing, maxing out your 401k. I hope your company is matching it to a point. And my thing to, my rule of thumb is, for myself, for example, I have an investment account. I go for long-term investing, right? Because long-term investing you cannot beat. But then I also trade with a sizable six-figure account. But the thing is, everybody should do the same thing. I mean, I'm not telling you not to play, but don't go crazy and just obviously you got to learn first. You got to learn first, and because you're dealing with guys like me out there, and we're going to take your money. I mean, you're going to pay your tuition one way or the other. So to me, it's like, put up something in a Robinhood account, swing some options, learn the tricks of the trade, and then maybe you can increase it if you're successful at it. But
Yeah.
in your 401k, continue doing what you're doing, man. You got to save for retirement, because even in the 401k, it's grown a lot, I'm sure. You're not going to keep pace with inflation if you don't do any investing. So I'm glad you're doing some sort of investing, right? Because the dollar is losing its value by 6, 7, 8% a year. So to me, if you're not investing, you're going to fall behind. And every year that you fall behind, you're just not going to catch up, because then you have to chase more return, and chasing returns is going to get you to the broker house. So, to not a good place. So my point in this is, I don't know your particulars. I don't know what stocks you're in. I don't know if they allow you to invest in a 401k individual stocks. I thought it was maybe company mandated mutual funds and things like that. So, but
Now I
you
have
said,
it in a raw 401k.
okay, you see how you said something that you said, like, I don't even know what's in there, that kind of a thing. I would take more interest in what you own, right? And if you're investing in for your retirement, you should definitely, I mean, I'm not saying like day to day, every day look at your 401k, but I would take more interest in learning and educating yourself, and maybe rotating within your 401k what you're doing. Because if you're in, let's say, Nvidia and Google and Apple and Meta, you've done really well. But there will be a time that you need to rotate and pay attention to maybe more small cap companies. And then there are choices that you will have to do. So be more interested in your future, as opposed to I'll just set it and forget it. It shouldn't be like that. Be more active, be more involved in your investments. That's my suggestion anyway. So
Okay. I'll keep on. I'll do a little bit more research and keep an eye on it. But
well,
for that, right now, this is my retirement, so I have that from my old job, and then I'm working in a W-2 job right now. They do give me a pension,
okay.
and I get another 401k. So that's going to be extra to what I'm earning now.
I 100% agree with you, and I think you're doing the right things. And if you get bored with it, don't be bored with it. Look, you cannot argue with the power of compounding. You cannot argue with the power of rule of 72. And by the way, so I don't know if you're a subscriber, but please go subscribe to my finance website. There's a free newsletter that
Okay.
goes out every Monday at noon. Okay. I'm not selling you anything. I'm not giving you advice, but then I want to inform and educate the right way. Okay. And it's a new website. It's launched about a month ago. It's doing really well. I would highly recommend you just go put your email in. I don't ask your name. I don't ask anything else. Just put your email in. Every Monday, you'll get something, start educating you about all these things, about compounding, about, long-term investing, trading. And there's going to be something for everyone. And I would highly recommend you do that, and then pass it around and support it. Because I think financial literacy in this country is in the shithole. Nobody's interested
I
in
agree.
education. Nobody's interested in all they want to do is they just want to go on social media and say, "Oh, look at me, I'm driving a Lamborghini." I don't give a rat's ass what you're driving. What do you know, right? The market, this bull market, it's saving your butt every time it goes down. Things will change, and then what are you going to do? So please go subscribe to the free newsletter. That's all. That's all I'm asking.
Okay, I will.
Okay, it's
Take care.
you know what? Yeah, I'm here. Okay.
Okay, thank you.
All right, you got it.
Bye.
Be safe out there. Yeah, there you go. See, interesting. That's what I want to do. I mean, people don't know, man. Honestly, investing is like something that could be really, really complicated. And I mean, I could make investing as complicated as you want to do. With my background, obviously, but then it's going to go over your head. And investing is a boring subject, unless you're swinging some zero DT options and making money or whatever. That's exciting. That's adrenaline. But long term, none of these people are going to be around, right? So my thing is, I've been around for 30 plus years. Why? The consistency, longevity, education is power, man. I want to educate and inform. So you know what? While I'm at it, let me put the website here. www. Pretty simple. Sergio Avedian, my name.com. I spelled that right. I did. So please go check out the website. Again, I'm not selling anything. I just want to inform and educate, pass the word around. This should be the topic of conversation at Thanksgiving coming out. What are you doing? How are you investing? Are you looking out for your future? I'm glad Daniel is doing his 401k. He's maxing it out, doing all that stuff. You got to think of the future. You got to, because nobody's going to take care of you. Unless you have rich parents that are going to pass you on some bunch of money. You got to take care of yourself, man. You got to learn. Financial literacy is garbage in this country. We teach our kids everything at middle school and high school, you know, except finance and except investing. Look at these college kids coming out with $200,000, $300,000 of debt and can't find a job. Look at go to Fred. Don't listen to me. Federal Reserve economic data. Look at the unemployment rate in the recent college graduates. Double the national rate. These people just graduated college with hundreds of thousands in student loans. They can't even get a job. And this is just the start of AI. I'm pretty sure it's because of AI. And people are getting laid off. 40,000 people getting laid off. 30,000 or 40,000 by UPS. These are not like GM just laid off a whole bunch of engineers. These are not like your regular, you know, minimum wage jobs. These are important things we need to look at. But then if you're not educated, you don't have the financial literacy, you're just going to be left behind and nobody's going to care. So anyway, welcome to Trade Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Every Monday and Wednesday, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. And every Wednesday, 4:30 p.m. Pacific, 7:30 Eastern, is Members Only Live. I have a members chat group. If you want to join, click join on the YouTube channel. Send me an email, sergio@sergioavedian.com. I will send you the Telegram chat group link. Wonderful group, really tight knit group at the moment. And, you know, I want to grow it, but, you know, it's up to, we do more trading. Obviously, there's more trading advice, you know, and, well, I post all my trades live and I post my positions live. FYI, I will post my positions on the community page of the YouTube channel. I do it every Monday, Wednesday, and Friday. None of this is trading, financial, or investment advice. Do your own due diligence. What I do is very risky. It fits me. It fits my account size. It fits my temperament. It fits my knowledge level. So don't blindly follow anyone on the internet. Please don't do it. So good morning. Let's see who's here. Zavan, there you go. He's the one with two little boys. Yeah, you better teach your boys because, you know, the world is changing, man. Doug muted. Good afternoon. I'm doing well. Hopefully you're doing well yourself. Happy Halloween, folks. Trick or treat. Be safe out there. It's a wonderful time of the year. I don't know what we're doing. I have a college daughter who's probably going to go with her friend somewhere. So it'll be me and the wife probably having a drink. And oh, Mr. Premium is here. You know, Mr. Premium, I would love to talk to you one of these days. I really would. Good morning, John. Yes, good morning. I think they're valuing the potential of AI instead of actual effects of AI. Yeah, that's a good point, man. Good point. The potential of AI is unknown to me. I mean, I do listen to a lot of podcasts and things like that. I've listened to Sam Altman's and Elon Musk's and all these wonderful, brilliant people, but I think they're just gaslighting a little bit here. Because of the power they hold at the moment, you know, they're saying what they say is like the Bible. I don't know about that. I think they're concealing a lot of the negative effects of AI that could happen. I'm not saying it's going to. It could happen. But then yesterday there was news that OpenAI is looking to go public at a $1 trillion market cap level. Look, folks, there's a lot of money in here. There is a lot, although fiat currency is dog shit, but there's a lot of money here. And tech bros are not going to say no to the money. So we know. Morning. Do you see Bitcoin and Ethereum making the all-time highs before the end of the year? Honestly, no. I mean, Bitcoin is the same price. Actually, I was on Wednesday, I was looking at that during my members live. Bitcoin is the same price, literally identical, same price as it was December of 2024. So it's been the same price. Yes, it had the fluctuations, 125 down to 95, whatever, but it's exactly the same price as it was December of 2025. So, look, you know, a lot of people are talking about Bitcoin and Ethereum. I'm invested in it. You know, I have positions in it, sizable positions in it. I dollar cost average Bitcoin every Monday, every week, every Monday. I still do it. I believe in it, but I think the gains going forward are not going to be what people are used to. You know, so 0 to 100,000 it took 10 years. So 100,000, a million probably will take another 10 years. But again, even at those rates, it's incredible amounts of return. So yes, ultimately, I think they're going to go higher. But by the end of the year, I don't see it. I mean, I see still stuck in a trading range, right? 125 to 100, let's say. And on ETH, maybe 4,700 to 3,700 or 3,500. I mean, look, I do understand. I follow everything about crypto. No, I mean, I don't see it just because Tom Lee is saying it or just because Michael Saylor is saying it. I don't see it. I don't see a fundamental reason for it to happen. Technically, maybe, I don't know. But then, you know, a lot of people ask me this question, and I really kind of don't know the answer when it comes to this. I know, kind of know, but let me see what you guys have on this topic. So somebody asked me the other day, Tom Lee through Bmnr, right, is buying literally ETH every single day. He's doing ATM sales and buying hundreds of millions of dollars worth of ETH. Somebody said and say Michael Saylor is doing the same thing. About 280 corporations around the world are doing the same thing. They're turning into DATs, right? DATs are digital asset treasuries. All this buying is happening. Who's selling, they're saying? And why isn't the price going higher? Especially on Bitcoin case, because it's a finite asset, right? Ethereum, not so. So I'm going like, first of all, they're not doing it on Coinbase. They're not doing it on open market transactions. They're doing it on over-the-counter. And over-the-counter is a completely different animal than going, and you know, Tom Lee going and buying 150,000 ETH. If he did that on Coinbase, the price would melt up. Who is selling? Good question. Why isn't the price going up? All this institutional support. Why isn't Ethereum already 7,000? Why isn't Bitcoin 150,000 already? It's a good question. It's a valid question. Immediate response to that is there is long-time holders on these things, and they have introduced a lot of these different products, and it's become trading tools now. I mean, there are whales out there that are just taking 40, 30, 40x leverage positions and moving these assets back and forth. So that's one of the reasons. And then, but I don't know. I mean, it's a valid question. Like, all this buying is going on. Why isn't the price reacting? Good question. Because in my world, supply and demand rules, right? Potatoes and tomatoes, man. If there is less of something. Now, what's happening is that, though, according to Michael Saylor's strategy, he's never going to sell it. According to Tom Lee, he's never going to sell Ethereum. According to Sbet, they're never going to sell. Okay, I get it. So all these all these coins are being switched from long-term holders that have been holding for 10 years. I mean, there are people who own Bitcoin at 100, or there are people probably who own Bitcoin at $5. So they are taking, probably profits. They're the sellers. But then what's happening now is that it's changing hands. There's a new guard now. The new guard is the institutional guard. The old guard was like, speculative and whatever. The new guard is the institutional money is in here. And there's a lot of money out there. I mean, Bitcoin, I think, is what, 2 trillion asset compared to gold, compared to stock market. It's not even a baby. It's just a newborn. So when institutional money really comes in, when Tom Lee's future look on Ethereum that everything is going to be on that blockchain, right? Wall Street is going to be reformed like it was reformed in 1970 when we went off the gold standard. And then synthetic dollars was able to get created and all these products show up. Are we going to live through something like that? Look, Tom Lee's a goat. I mean, the guy has been right. You got to listen to what he's saying. And yeah, ultimately, I'm bullish. But I don't really pay too much attention to these day-to-day, because Bitcoin will go like 120 to, it went to like 105 yesterday or 108. Bitcoin crash. I'm like, what are we talking about here? It corrected 10%. What is the problem here? But people these days are so short-term oriented. They look at minute to minute. I'm like, I don't think I can do that. Well, I'm not willing to do that. You can't do it if you want. But then you're going to go through this, altcoin meltdown like it did a couple of Fridays ago. And if you want and I don't know, 40x your fart coin and you lost everything, I have no remorse for you. Good. You have another 30 years to build it back up. But Bitcoin, Ethereum, Solana, I understand. I kind of understand, and I invest. I'm investing. I'm also trying to trade, but you got to think a little bit long term. Then, by the end of the year, is Bitcoin going to be in the all-time high? Like, I have no idea. If anybody says they know, they don't know. They're not lying. They're just talking their book. Good morning, everyone. All right, let's talk a little bit. So, Max 7, what happened to Meta? Apple earnings were okay, but these stocks are moving wild, man. Wild moves in these stocks. I mean, Meta got crushed. I think it's selling off some more today. I am interested in buying Meta at some point, but not yet. Oh, we did something. I don't know what we did, but we'll look at that in a minute. So what else is going on? Yeah, Max 7, couple were bad, mostly good. Holding the markets up. Nvidia obviously is going to be the next big one. That's in November. What else is not reported? Tesla did okay. Google, amazing earnings. I own Google in my full transparency in my investment account. I'm looking to buy UPS for some reason. I don't know why, but I'm going to. So I have 3 stocks at the moment in that account. One is eating it, which is Kava, going with Chipotle. I do like the company. They're probably still a little overpriced here, but I'm accumulating. I have Google in there that I bought during April. Got lucky with that. I had Nike. I switched it to Lululemon. Nike went up like 40%. I don't know why it did, but I owned it. So I go, okay, you can have it. Switched it to Lulu. I had Unity software. I sold it with 120% gain. I don't like selling things in less than a year in my investment account because of tax reasons, obviously. Long-term cap gains, a lot more friendly to your pocket than short-term cap gains when you're doing your trading. So, yeah, those are the ones I'm looking to add. UPS. Again, I don't know. I mean, the layoffs, are tough, obviously, but when the company starts laying off people, it looks like they're taking their cost cutting seriously now. And unfortunately, stocks go up when they start laying people off. Yeah, those are I have. My trading account's doing fine. I have a target in mind. Hopefully I'll get there by the end of the year, but yeah, that's where we are. What else is going on? So I have an option expiring today at 1 on Beyond. I'll explain the positions in a minute. Oh, one last thing. Let's talk a couple of minutes about the Fed. A lot of people are saying why is Fed cutting the rates? They're asking like, why is the Fed cutting the rates? I go, I think they're seeing trouble ahead. Because if you listen to Jay Powell on Wednesday during his Q&A, He said two things, and repeatedly he said the same thing. He goes like, inflation is higher than we want, and unemployment, or employment is weaker than what we want. Well, their mandate is 2% inflation, right, with full employment. And I'm going like, well, they're just going the other direction, and why are you cutting rates then? Maybe you should be raising rates, because inflation is a lot higher than what they say it is, number one, and it's nowhere near their 2% target. So to me, he said that like multiple times, and I'm going like, that's the perfect definition of stagflation. Economy is getting weaker, unemployment's going up, and inflation's going up. I'm like, that's stagflation. What's the cure for stagflation? There isn't cure for stagflation. Go check history. Go check what happened in the 70s, right, with Paul Volcker. And now they're cutting rates. All asset classes are all-time highs. They're cutting rates. I'm like, I don't know. I mean, there's a saying, don't fight the Fed, obviously, right? So something is going on. We're doing, I think it's my Beyond call. Beyond puts are getting rolled over. But anyway, so yeah, Fed's cutting the rates because they're seeing trouble ahead. They're trying to be proactive. But then they're also saying, the T word again, the transitory word. Remember in 2000 when they pumped 8 trillion into the economy, everybody was saying they need to raise rates. They need to raise rates. They were behind the curve. They didn't raise rates, and then what happened? Inflation genie went out of the box, and we can't put it back in the box now. So, are they behind the curve again? We'll see. But then them cutting rates when all asset classes are at all-time highs is kind of weird to me. Especially if they think inflation is stronger or hotter than they expect, and then if you cut rates, inflation is going to get hotter. So I don't know. We'll see. We'll see what's going to happen. So yeah, that's where we are. Well, those pings. Let's see what we're doing. I don't know what we're doing, but we're doing something. I may be adding to my SOLT calls at the moment. You guys can see this, hopefully. Yes, you can. Okay. What are we doing? I don't know what we're doing. I don't know. What are these pings for? What do we do? Oh, we're doing the Beyond rolls. Okay, cool. They're doing a couple options at a time. That's fine. All right, let's go through the positions. I had a balanced call debit spread going out to 2027 on Strive Inc. ASST is the symbol. I'm long 250 January, 2.5 calls, and I'm long 150 January 2027, 5 calls. I was short equal amounts of January 10 calls. So it started at a call debit spread, but now I'm buying the calls back with profit, basically lowering my cost basis. On the other side, I'm only short 100 instead of 400. I'll buy back some more at 20 cents, or I'll just leave him alone. 400 long, 100 short. It's fine. Look, ASST is the new poster child because Mike Alfred bought 1 million shares. I don't know. I look at the MNAV on these things, man. You got to follow MNAV. If you're trading these DATs and if you don't follow MNAV, you're going to be in trouble. So you got to follow MNAV. And I've talked about MNAV multiple million times on this channel. Go check out some of the previous videos on the channel. I don't want to get into MNAV. But for every goddamn fool who's on X drawing chopsticks on Bmnr or SBET or DFTV, you guys need to go get your brains checked. You can't draw chopsticks. You can do technical analysis on these things because they are the tail. The tail is not going to wag the dog. The dog is Ethereum. The dog is Bitcoin. If the dog doesn't move, the tail ain't going anywhere. So, but they have this weird sense of, I'll do technical analysis on Bmnr. You're a fool. And if you're a fool and you heard me call you a fool, grab the link and come on. We can chop it up. It's ridiculous, really. And then, I mean, seriously ridiculous. And then these are people who have like 200,000-300,000 followers on X. And then their followers have no goddamn clue about what they're doing. Oh, this guy said it. I should go buy Bmnr. Yeah, you're going to eat it. Because Ethereum went down from 4,500 to 3,800. What did Bmnr do? Went from 62 to 47. What happened to your technical analysis? I mean, come on, man. That's what irritates the crap out of me these days about this social media bullshit that people are doing. But anyway, who cares? It's your money. Do whatever you want. Okay, anyway, so Beyond Meat, the meme stock of meme stocks went from 50 cents to $10. All the bag holders are crying now. I'm like, yeah, buyer beware. Do you even know why you were buying? I don't know. Anyway, I have a profitable position. I'm just gonna play it out. So what I have is I'm long 300 November regular expiration, November 21 expiration puts, dollar puts, $1 puts. Stock is 156. But last week I sold. I turned the long puts because time decay or theta decay was killing me. So I'm going like, well, screw you. I'm not going to lose money. So I went and sold weekly. They're expiring today. I went and sold weekly 1.5 puts and 1 put. Turned it into a put credit spread from a just long directional put play. And it paid off, obviously, or it's paying off. Well, today I'm trying to roll the weekly today's expiration puts to next Friday's expiration puts at about 17-18 cent credit. So lesson learned here for you people, for traders, is you should not just create a position, always have a plan, right? If it's going against you, what can you do? Well, obviously you can take the loss and get out, or you can watch theta decay just wipe you out, or do something, be proactive about it, which I did. I turned a long put into a put credit spread. Stock is 156, so we're pretty close. I am willing to get assigned shares, and then turn around and sell weekly calls on it. So I have many choices. So when you do multi-leg, trades like this, you have many choices that you're provided with, as opposed to stuck in a box. So that's that. I will post all these positions at the end of the day, by the way. So I have orders to roll from 1.5, not 300 of them, only 150 of them. I was short 225 of the weekly 1.5 puts. I'm not going to do put for put. So you're going to say, well, what if you get assigned? I go, great. I get assigned, I sell the calls. My 300 long puts expiring November 21 is giving me plenty of protection, so no worries. But I have a plan, and I'm going to execute the plan. So I added a little bit to this today. I'm long 13,000 shares now, FTHM. You guys can go research the company. It's Fathom Holdings, cost 168. I am short. This also was, this position has a history, but now it's a short strangle on METC or Macro Resources. Short 25 puts, short 47 calls. So if you know what a naked strangle is, I'm basically short the puts, short the calls. Took in $210, sorry, took in 210. They're about $150, so I'll have data decay work for me on this one. Here's a big position, my biggest position when it comes to that on ETH. I'm not going to touch Bmnr. The reason is it's selling at a premium. I don't believe any DAT should be selling at a premium, but I also don't believe any DAT should be selling at a 20% discount to MNAV. Again and again, MNAV, if you guys don't study it, you're going to get hurt. Don't buy these things because you think you know what you're doing. I know what I'm doing, and I'm still losing money on this position at the moment. Although long term, I do believe ETH is going to be a lot higher. So Sbet is Sharplink Gaming. I'm long 2,000 shares. I'm looking to add actually at some point. I'm long 2,000 shares at 17.18, but I've been selling weekly calls and lowering my cost basis. I am short the 17 calls for this week, and next week I'm going to short the 16 calls. I'm just going to keep selling calls against the shares, and I'm also short 80 going out to January 2026 expiration, 80 put credit spreads. I'm short the 15s. I'm short the 15s, long the 12.5s. Again, this is all defined risk stuff, because anybody tells you, oh, Ethereum is going to 20,000. I'm like, yeah, it's not there. My point in all of this is, when I'm stepping up on these, because number one, the reason I'm in Sharplink is because it's selling at 0.83 MNAV. Okay, I like the discount. I like buying $1 for 83 cents. Number one. Number two, could ETH go to 3,000? Well, hell yeah. Then what's going to happen to Sbet? Then what's going to happen to Bmnr? They're going to cut in half. That's why I have put credit spreads. I know my risk. I know my max loss on this trade when I enter it. Because if you're blindly buying in Bmnr, you're going to get hurt if ETH goes to 3,000. Period. No ifs, no buts about it. Could ETH go to 3,000? Of course it could. If anybody tells you, oh, no, I'm like, well, of course it could. I mean, there's no guarantee. ETH is going higher. And then the other thing is with these furus and gurus on X, they go like, oh, look at this chart. Yeah, shove the chart up your, you know what? It doesn't mean shit. If ETH doesn't go up, Sbet's not going up. If ETH doesn't go up substantially, Bmnr is not going anywhere. And if ETH goes lower, Bmnr is going to go lower and Sbet's going to go lower. So when I do enter these trades, you know, I do defined risk trades because put credit spread is a defined risk trade. I took in $1.60. My max loss is $2.50. Okay, I know my loss is going to be 90 cents in this trade. But then if ETH drops to 3,000 and SBAC goes to 8, I could lose a lot more. So, you know, I put on defined risk trades with plenty of upside. And where does my upside come in? Obviously, the shares. But I'm long, which I'm losing money on at the moment. I'm long January 2026. I'm long 80 of the 15 calls. I had profits on it. I thought it was going somewhere. It didn't go. We're at 13 and a half. Okay, I'm keeping the longs. I'm not going to add to it. I'm not going to add to the short PCS and long calls. I'm just going to keep selling calls. In fact, the calls that I sell, if you guys see here, I'm short 100 of the weekly calls that I sold at 5 cents. And I'm going to keep selling those calls. So what am I doing by doing that? Okay, well, weekly, you're just lowering your cost basis on the calls you own, on the put credit spreads, and on the shares you own. So that's the playbook, folks. And I'm long 45 now of Solana 2x ETF. I'm long 45 of the November expiration. I was short calls. This started as a call debit spread. I covered the short call side with profits. Now I'm keeping the long side on its own. Not a big position. I'm long 45 of the November expiration, regular expiration, 20 calls. We'll see. You know, Solana is following, obviously. Bitcoin is head-to-head with Ethereum, obviously. So, yeah, those are the positions. It's pretty clean, really. Now I'm just waiting for what happens with Beyond. That's my only weekly expiration situation at the moment. I will add to Fathom, by the way, another 1,000 shares. I've been buying 1,000 shares at a time. I'll probably get up to 15,000 shares and probably create a covered strangle out of this at some point. I do like the company. They're the largest, you know, well, we'll see. Fed's cutting rates. Interest rates are going down. Should create some activity in housing. They're the largest real estate broker, mortgage broker, and title company. And they've been actively buying other companies. They just did the secondary, so they don't need cash. They diluted, and they did the secondary at 2. Stock is 140. Full transparency, a good friend of mine is the managing partner at Roth MKM. He has a buy on it with 2.5 targets. So I go, okay, I'll accumulate $1.50, $1.60 range. You know, so there's many things I can do with it, but it's a long-term hold. I don't put dollar stocks in my investment account, but you know, it's a good play. I mean, it's a good spec for me anyway. So Beyond, I got to watch until the end of the day. I'm trying to roll. I want to end up with 300 long puts and 150 short next week expiration, 1.5 puts, and then probably 150 of the. So put credit spread continues. The losing position turned into a profitable position. So you guys got to manage. You got to know what to do with a loser. Now you can take out and get the loss, take the loss, or you manage. I'm all for managing. You need to know how to manage. If you don't know how to manage, you're just gonna, especially on long directional plays on options, right? So what they tell you is the truth. 80-90% lose money on options, especially if you're doing directional stuff. But then there's ways. You can always turn a losing position into a winning position if you have the knowledge base. If you don't have it, if you don't have the experience, you're just gonna watch them expire worthless. So yeah, that's where we are, folks. I'll go through some charts in a minute, but then let me go to the front, answer questions. I have about 10 more minutes. I'll put up some charts, do some chopstick reading for you folks. Gotta love these chopstick folks. Ooh, Bmnr breaking out. Oh, MACD's turning up. Oh, RSI is bullish divergence. I'm like, you're a fool. You're a bona fide fool. Period. There you go. I called you a fool. If you're interested, grab the link and come on. These people, man, they're just snake oil salesmen. They just go, oh, yeah, Bmnr, look at this. So now on Bmnr, they're going to have to redraw more lines now. They go like, oh, look at this thing. Look at that thing. Bmnr gives why. because you're technically analyzing BMNR now. BMNR is not going anywhere, up or down, as long as Ethereum goes to 3,000, it's going to go to the low 30s. Yes. Okay, cool. If Ethereum doesn't go there, then BMNR is not going anywhere. It's pretty good, actually. You can create some really good yield for yourself. If you're owning BMNR shares, you can sell some calls. Pretty juicy premiums on those. So nobody else has asked any questions? Anybody want to come on? So let me mention my website, the free newsletter. Two newsletter articles went out every Monday, 12 p.m. Pacific. Help me with this project here. Financial literacy. Just help me out, folks. Just grab the newsletter. It's free. All I'm asking is your email. I'm not selling you anything. I don't have Discord. I don't do any of that. I just want to educate and inform. So go grab the newsletter. You get it free in your mailbox. And then pass it around. Because financial literacy is just a must. If we don't do financial literacy, you're never going to go up to the top 10%. You know, they're doing fine. They figured it out. But why is the wealth gaps the widest ever in this country? Why? Was the top 5, 10% know what they're doing? You know, they go buy hard assets. They accumulate hard assets. What are you guys doing? Whip out the credit card and buy something for yourself so you can pay 40% interest? I'm not against debt, by the way. I'm not like Dave Ramsey. But we can't manage debt. We don't even know how to manage debt. Look at these college kids coming out of college with $300,000, $200,000 in student loans that they're going to pay the rest of their life. Teach these people. Maybe it's not good. Maybe you're not college material. Maybe you shouldn't go to college. Maybe you should go to trade school. I don't know. I feel like, what the hell, man? Anyway. All right. Some questions showed up. Doug says, do you plan rolling Sbet 17 calls? I will go lower now. I will go 16. Yeah, every week. I'm going to keep selling. I have January. I have like, I don't know how many weeks I have. I have, I think, 7 days. So that's pretty easy to figure out. I think expiration is 87 days away. So I have like 10 more weeks. Yeah, I'm going to keep selling calls. Against the long calls, against the put credit spread, and against the shares. That's why I'm short 100 of them. They're going to expire worthless. Monday morning, click, send. Keep selling calls. And if it does go up, great. Fine. I'll manage it. That should be a good problem to handle. Because right now I'm eating like 17 grand on that position. And I thought I did fine. I mean, see, I tell you guys my losses too, but I'm okay. I'll be cool. Oh, what a tough question to answer. So what'd you do on Fiserv? You did it in Fiserv or Meta? Okay, I don't want to insult anybody because I have a tendency of doing that. I'm not trying to. I'm just trying to make you guys understand. There is this thing out there that selling options is amazing. Okay. This question relates to that. Selling options is amazing. It only works. This is reality, folks. So you can agree or disagree. It only works when you have a buy the dip bull market going on and on. Except that you will get nailed with a couple, and all that premium you collected will disappear. For example, let's talk about Meta. So you went for a cash grab and sold weekly puts on Meta before the earnings. You shouldn't have, but you did. For example, you went and stock is 760 or 750. You sold the 700 weekly puts for a few shekels. You know, grab those pennies in front of the bulldozer. I go, okay, well, shit. Stock dropped to 660 yesterday, and it's there probably today. The options you sold for $3 are worth 40 now. Now what? Now what? Two choices you have. You really like Meta at 700 minus your $3, and you don't take assignment because you're so deep in the money now that you have to roll out a year or 6 months. Now, that little cash grab for a week turned into a little trade that you put on, right? I've met a lot of these people in my life. Short-term little play turned into a long-term investment now. Because if you do roll, you have to roll out so far out. So a weekly play is going to turn into a 6-month play now. What is that going to create? Opportunity cost, unless you have a massive account, right? So if you sold puts and buried, which a lot of people are, so my point is selling puts is fine. But don't listen to these ex-furus out there saying, oh, look at all this money I'm making, I'm selling premium. It's not what it is. You're stuck now, right? What you do, if you like the stock, you get assignment. That's it. Why did you sell the puts to start with? When Meta was 750 and you sold the 700 puts going out for 3 days, expiring today, did you like Meta at 697 when you sold those puts? Okay, then take the shares. But then there was one yesterday, like called Fiserv. That thing got cut in half. So selling puts is not what people think it is. Yeah, if you've been selling puts on Palantir or Nvidia, or I don't know, even if you sold Tesla, you'd be exciting. If you sold puts on stuff that's like pretty wild, you need to know how to manage it. And then it becomes kicking the can down the road. So selling puts, selling calls is not exactly what people say it is. They make it almost sound like a no-brainer, risk-free kind of a situation. It's not. So once you guys understand that, then maybe. Oh, and Bmnr. Okay. Well, we'll talk about that in a minute. Then sell cover calls against them. Yeah. Go weekly cover calls. Take a little money because give yourself the upside chance. Good question. How do you hedge for large vol spikes? Short futures. Index puts are not working out. I figured that out. Short futures, cut exposure, short stocks. I short quite a bit. That's it. But buy an index. The Jem Carson, who's a GOAT, he said that's like on a podcast 6 months ago. He goes, what's going to happen is that all these institutions are going to go buy puts. Indexes are going to keep grinding, but the underlying stuff is going to go crazy, and exactly what's happening. You're going to buy the index puts yesterday after the market dropped. You would have been losing money now, while your Meta is down 70 points. You know what I mean? So this is a very peculiar situation. It's not working. So I decided to just go short futures or short stocks. I've shorted a lot of stocks this year. I'm going to probably go short again, but that's how I do it. I can't do it any other way, because if I do index puts, they're going to just wipe me out. I mean, just look at today. Underneath the market on my watch list, like I have 300 stocks, 250 of them are red. Like 30 are unchanged and 20 are up. Those 20 are pushing the index up, and my index puts are eating it, So I don't have index puts. But what I'm saying is that it's really difficult to hedge these days. Futures are probably the best way to do it. Bmnr. Okay. What puts did you sell? Did you sell 50s? 55s? Hopefully not 60s. Yeah. I mean, look, at least you have a chance. Take the shares, man. If your account can handle the shares, take the shares. Come on, man. That's not eating it. That's not deep in the money. I thought you were in Meta or something. 51, take the shares, bro. Don't even sell calls. Just take the shares. And then next week, sell weekly 60s for like 50 cents or something. Easy. I thought you were in Meta or Fiserv or one of these disaster, or Chipotle or something like that. No, that's easy game, bro. That's nothing. It's 51. It could be 51 by the end of the day. What do you make of Meta? No, definitely not. I like the company, obviously, but the spending that they're putting on And literally, go look at the Meta balance sheet. They have zero cash. Go look at it. In fact, they're just going to float a bond now. This CapEx spending that they're putting on is historic. Like hundreds of billions of dollars. All the cash that's coming in. I mean, Meta is a free cash flow machine. All the money is coming in, is going out. I mean, a company like Meta has zero cash, almost zero cash on the balance sheet. So, because they're spending it. They spent that on the goggles things, like they spent like 10 billion on that thing. And where'd that go on? So, I mean, at some point, this has to bring in something. So I'm really cautious on Meta at the moment. I'm not. Maybe 600. Give it a crack. Sell some puts maybe. Yeah, this spending has to somehow result in some sort of return. And if you're spending now for a return 3 years from now, yeah, you're gonna. I mean, all the earnings were okay actually. Actually, earnings they beat, revenue beat. You know, but without the spending, earnings would have been good. But earnings were good, not would have been good. They were good. I'm just, with these big names, when they drop like this, 10, 15%, it's hundreds of billions of dollars, right? Market cap gets wiped out. I have like a week, 7-day rule. You just let it settle out. There's like billions of shares out. Some institutions are going to, cut exposure. So you need to like wait until it settles out. So my thing is like a gap down. It'll probably go like a lower sideways. It'll trade hundreds of millions of shares a day. And then it'll just start going sideways. And then you'll just kind of figure out, okay, we bottom here. Is there any more selling? My experience is when a stock cracks like that, it's not a 1 quarter thing. They will wait. The market will wait a quarter. It'll just settle. It'll probably be a good time to sell way out of the money puts, things like that. Just collect some cash for a couple, 3 months until the next quarter comes up, and then the move will happen. Or the stock will tell you what to do. The price of the stock should be your guide. Okay? I mean, if you're looking at it fundamentally, Meta ain't exactly a cheap stock. Well, none of these Max 7s are cheap. But, again, I'll probably wait to 600. Or, trade the 2x ETF with some options, sell some puts. Yeah, you're fine. Just take expiration. Take 51. It's nothing. Just take assignment. Take the assignment, my man. See? This is the wrong comment after I said what I said. It is not a stock, sir. Bmnr is not a stock. Bmnr has no earnings. Bmnr has no revenue. See, Meta has revenue. Meta has earnings. Meta has free cash flow. Meta has employees. Meta has shit. Bmnr has nothing. Why are you people doing this to me? And then the X feed keeps feeding me these charts now. Don't do it. You're going to get hurt. Why are you bullish on the stock? It's not even a stock, but why are you bullish? Because Tom Lee's involved? If you're not bullish on Ethereum, you should not be in any of these things. If you're bullish on long-term on Ethereum, then yeah, Bmnr should be good. But my horse in this race is going to be SBET. Because Bmnr is 1.3 MNAV still. Why should Bmnr's Ethereum be more valuable than the market cap? Why? Because Tom Lee's involved? No. Look what they're doing to Michael Saylor's company. 2.2 MNAV down to 1.2 MNAV. All these DATs are selling at under MNAV now. So I'll just go grab some that are at a discount as opposed to a premium. Why should be, a lot of people go, they're going to stack a lot faster because they're doing ATM sales and this and that. But Bmnr is not a stock. It's not. This is a digital asset treasury company. And it's selling 0.3 more than their net asset value, which is the only thing they have is Ethereum on the balance sheet. That's it. They don't have anything else. They don't have a product they sell. They don't have earnings. They have nothing. So it's not a stock. Don't treat it as a stock. As I said before, it's the tail of the dog. The dog is ETH. If ETH doesn't go up, Bmnr is not going anywhere. Period. Done. What do you think, Meta? I'll just look at the charts. I'm gonna look at some chopstick analysis for you. I'll just take a look at it. Fundamentally, look, you got to give it some time. I mean, it has to settle down. So with that said, let's go to charts, put the questions up. I'll go through, do some little chopsticks for you guys. I'm not making fun of technical analysis, okay? Seriously, I'm not. I'm not joking. I don't think it, I mean, it's okay. It works. I don't know. Patterns repeat, I guess. But don't do technical analysis on Bmnr, SBET, DFTV. Don't do it. It's pissing me off. That's it. All right. So this is, let's go to SPX. Let's fix this for a minute. You folks, give me a minute. Let me adjust these, and then I'll be right back. All right. So I'm going to put SPX. Higher highs, higher lows. What's there the question? Here's the power of compounding for you. Okay. Compare this to anything else that you have done. This is 10-year weekly. This is the S&P 500 going back to 2016, folks. Okay. Dollar cost averaging, passive investing. I mean, if you know what you're doing trading, you probably will beat it. You're not going to beat this. Okay. I'll be right back. Give me a minute. Okay, sorry for the interruption. So this is the S&P 500 going back to 2015, 10 years. Yes, it had corrections. Yes, this is the pandemic. Okay. This is the interest rate hiking cycle. This is the April Fool's joke by President Trump. My mentors used to say this. Listen, you don't have to be a trader. Not everybody deserves to be a trader. That's why 80%, 90% lose money. They would say time spent in the market is more valuable than time spent timing the market. Get that in your heads, folks. Trading is not for everyone, especially these days. So this is the 1 year, 1 day. I look at clean charts. I don't draw too many lines. This is it. Higher highs, higher lows. I don't know how you can be bearish in any of this stuff, but that's the way I learned it. It looks like an uptrend to me. This is triple Qs. Looks pretty similar. I'll go through the Mag 7s. Actually, first take a look at Meta. This is the triple Qs. Higher highs, higher lows. I don't know. In this, all these past since the bottom in April, we haven't even, once a couple of weeks ago we tested the 50 EMA. All my charts, by the way, I have Bmnr bands, 20 EMA, 50 EMA, 200 EMA. This is 1 year, 1 day. Volume, obviously, and MACD. That's all clean. I don't pay too much attention to anything else. What else? Okay, let's start with Meta. Yeah, on its low, see? 651. If you sold the 700 weekly puts, nowhere is your ass today, right? Look at the volume. Look at this volume, right? Look. This is 88 million shares today already, close to 40 million shares. Look, see, Meta does have these whooshes, okay? This was during April. So, but compare, I mean, under 200 EMA, trend is broken, massive gap. I'm talking technically now. Fundamentally, yeah, I don't like it actually that they don't even have cash on the balance sheet now. They're doing all the spending for a reason. They're not dumb people. So what I would do is I would wait for this volume to kind of subside, and there's going to be more selling. Let the selling be done. There's a gap here. Again, technical analysis, voodoo economics, whatever. So there's a gap here about 607 to 615, something in that range. There's another gap down here about 550 range. Again, a lot of technicians say gaps will be filled. I'm like, yeah, at some fucking point, probably. Just looking at support, I don't know, 625 seems decent. I don't know, man. But I do have a tendency of measuring things. So if I were to measure this down leg, 795, 695, 100 points, 757, 100 points, 657. We're below that. So if we're below that, that means the stock is weaker than anticipated. So yeah, there's like go deal with other Mag 7s. Because Meta during April's whoosh went from 743 to 480. That's 250 points, folks. I mean, I'm not saying, this is one, if I did not know this was Meta, this was like a rolling top like this, I'd be like, no. I don't like touching anything under 200 EMA, period, with a certain exceptions. So if you're a fundamentalist, you just got to look at your numbers. Anyway, this is Apple. New all-time high. Nothing wrong with that one. Google, the best Mag 7. It was actually the worst Mag 7. Now it's the best Mag 7. Microsoft, same thing. Microsoft also kind of looking like a little toppy here. That's why I'm kind of questioning all these. All these generals are kind of slowly getting shot, and the soldiers are dying anyway. By the way, let's just look at this outperformance. This is the IWM. IWM is Russell 2000. It looks nice, right? But then let's do a comparison. Okay, versus SPX. Look at SPX going back 10 years. And look at IWM. Look at that. IWM is hardly at an all-time high. And it's just outperformance by the big caps has been immense for years, for 5 years minimum. Okay. So okay, let's look at the numbers, in fact. So let's look at the low on IWM during pandemic. That's 5 years. Let's say 95. Today we're at 254. Okay. That's a decent return, you would say, right? Okay, cool. Look at SPX. Okay. SPX low during the pandemic, 2181. Today we're at 6,800. So we're about 250% versus 150%. I mean, you would have done okay in IWM, don't get me wrong, but comparatively, right? Triple Q, same thing. So at some point, this lower interest rate regime is pretty decent for small caps. They're more interest rate dependent. So if we're going to get lower interest rates, a rotation may be taking place, and I'm definitely paying attention to that. All right, let's go through some charts, and then I'll answer some questions, and we'll leave it at that. So we looked at Apple. Okay. Let's look at some small caps, big caps. Archer Aviation, that's the eVTOL stock. It's kind of basing here. I don't mind giving a crack at it with a 2x ETF probably. Affirm is a company I like. They're in the buy now, pay later. It's just kind of consolidating. Lemonade is, I definitely like this company. It's just consolidating before earnings. Earnings are just, it looks like another breakout coming up. I do trade a lot of these 2x ETFs, by the way. AMD, what is there to talk about AMD? Higher highs, higher lows, man. Looks completely different than Meta, doesn't it? Yeah. Amazon, big beat. While, Amazon gained 250 billion in market cap from yesterday to today, but they just laid off 40,000 people. Isn't that interesting? Yeah. I want to add UPS. Let's take a look at it real quick. UPS actually UPS, see, they lay off people, stock gaps up. I'm definitely going to be interested in UPS now. Definitely. By the way, so when you guys say stonks only go up, have you guys looked at a 10-year UPS chart? Yeah, stonks only don't go up. So UPS was 233 in October of 2022. It got down to 80. 80 is the same price UPS was 20 years ago. No joke. So stonks only don't go up. Here's UPS. You can see this 80 low right here. Okay, we have to go back to 2004, literally 21 years ago. Same price as 2004. So, stocks have their own mind. Just because the index is going up doesn't mean your stock is going up. So my point is, if you're stuck in one of these, good luck. So stonks don't only go up, they also go down. But actually, I'm going to start selling some puts or buy some shares in my investment account on UPS. Let's look at some of these quantum names. I was short. I made some money. I lost some money. Yeah, it's like these are the .com stocks. You can compare these to .com. They got nothing. Nothing. Seriously, they got nothing. But then, momentum is a powerful thing. Don't question momentum. ASTS. They all have like these massive corrections, by the way, right? Okay, so 103 to 65. That's 37 points in 5 days. If you're not going to handle this kind of volatility, you shouldn't be in these stocks. But that's because they don't have anything. They don't have no earnings. Well, ASTS has some revenue, actually. I did like the Chinese names quite a bit. Now that everything is settled with China or kissed and made up, I still like Baba. I think my favorite at the moment is Baidu in China. Yeah, it's kind of consolidating at a high level, so I do like Baidu quite a bit. Let's see. Bloom Energy. Look at this thing. I bought the stock at 22. No joke. You guys are going to check out my pre-videos, X videos. And when a stock goes from 22 to 144, now, if you're buying it here after 7x in less than 6 months, and if it goes down 30% on you and your account goes broke, don't cry. I can't buy it here. Will I short it here? Yeah, actually, if we retested the high, I probably will. Here's another one, SanDisk. You guys have seen this chart? 40 to 210. Yes, look, there's fundamental reasons, I'm sure, for this, right? But at some point, everything gets priced in. And until that happens, don't short these things, folks. You're going to get your face ripped off. I like a couple of different ones in that world. This is Bmnr. Bmnr 46. Yeah. Okay, so this is what they were doing. They took this high and drew a line here. I go, oh, it broke out. It's going to 80. I'm like, you're a goddamn fool. So that did not work out, did it? Then they took this high and then drew a line here and drew the wedge. I can do it all day long, right? That broke out. Okay, it's going to 80. Oh, that did not happen. Now they got, I don't know what they got now. So all these technical analysis gurus, furus on Twitter, Yeah, you fools keep drawing lines. Except, you know what you should draw lines on? This is the one right here. Oh, the chart looks extremely similar, doesn't it? This is Ethereum ETF. If this is not going this way, Bmnr is not going anywhere. Now, could one of these happen? Could Ethereum go from, I don't know, 4,000 to 1,500? Sure, it did before. But what is your protection? And then it went from 1,500 to 4,500. Okay. So, yeah, okay. Now draw charts on Bmnr, maybe. Not Bmnr, but on Ethereum. Because Ethereum, okay, let's look at the price. Ethereum went from 4,500 to 3,600. That's about 18%. What did Bmnr do this last 5 days? Oh, let's take a look. Oh, did it go up by itself? Oh, no, it didn't. It followed Ethereum, didn't it? Oh, okay, cool. So 18% on Ethereum and 57 to 43-ish yesterday. That's 14 points. What is that, 20%? Oh, okay, cool. Go draw some more lines. Fucking fools, bro. This pisses me off. They're fools, I'm telling you. Some of these people. Here's Beyond. Well, it's 1:59. We got 2.5 hours left. No, not Bond Surge, you dyslexic shit. Beyond. There's Beyond. 50 cents to $10. Actually, overnight it was 10. It shows 7.69, but overnight it got to 10. Baggies. Now the baggies are crying. I'm like, okay. You know, they diluted 80% of the company. These people made the company. After they diluted 80%, they pushed the stock from 50 cents to $10. They made the company in 4 days from worth nothing, and it's still worth nothing, to $4 billion market cap. How? I don't know. I tried to short, actually, but there were no shares available, and I didn't feel like going naked short. Because naked short has its own problems. Kava, I'm long in my investment account. I'm not liking it. I'm down like 8 points on it. Yeah, that technically it looks like garbage. And here it is. All the Gen Zers, millennials, Gen Alpha, whatever they are. This is Chipotle, folks. Stocks go down, folks. Okay. At 31. Massive underperformance, right? I guess none of them are eating Chipotles anymore. And Kava is in the same boat. Coinbase consolidating. Nice big update today. I mean, that's looking decent. Circle consolidating after went to 300, then went down to about 100, right? And this is IPO not long ago. Let it consolidate a little bit longer. Core View, same thing. Same thing. Actually, Core View looks better than Circle. Yeah. So it's high-level consolidation here. Actually, I like one of them that just came public, not just, maybe a couple months ago. That one is Figma. And earnings are Tuesday, I think. So if you don't want to gamble with it for earnings, wait for the earnings. But FIGG is the 2x ETF of Figma. So I may give that a crack, the 2x ETF of Figma. They just bought an AI company, for 200 million yesterday. Here's another nosebleed. Here comes the nosebleeds. EOSE. I don't know, $4 to 19. Okay. This is part of the AI energy boom group. You know what I mean? Yeah. Here's one, Oklo. How do you guys like them apples? So Oklo went from 193 to literally 110 in a matter of 5 days. 80-point sell-off. You guys can go check out. Well, you can't check it out, but in my members group, I go like, we need to short these pieces of shit. But then it's really difficult to short these things, man, because they rip your face off. So shorting things I like, but then it's tough. It's really tough to short things in 2016. I mean, to 2026. So, because the moves are not things I'm not familiar with. Just move like stocks moving 60, 80 points in a week. I'm like, I can't. I mean, if I'm wrong, I'm dead. So, gold, okay. A lot of people are talking about there's a big switch going from gold to BTC. I don't see it. Here's, by the way, so here's Ethereum. This is the Ethereum ETF. This is the Bitcoin ETF. You know, and then people go like, oh, MSTR is going to go to 500. I'm like, no, not if Bitcoin doesn't go anywhere. HIMS, the one stock I just don't have a handle on, but a lot of people trade it. It actually broke the 200 EMA yesterday, and today they're just kind of attempting a comeback. Earnings are coming out next week on that as well. I'd rather stay away from that thing at the moment. Hood, every pullback on Hood is being bought like nobody's business. You know, 153 to 120 pullback. We're right back to 147. SoFi, same thing. Although earnings, yeah, it's okay. Here's another one. People don't believe this company, but all it does is make me all-time highs. Palantir. But let's talk a couple more of these nosebleeds. IONQ, which is a quantum computing stock. Not worth the paper it's printed on, but it is what it is. I mean, it got saved. Actually, well, they were dying. It went from 84 to 53 in about a week. But then Trump administration said that they may buy some stakes in these, specifically three: Rigetti, IONQ, and QBTS, D-Wave Quantum Computing, which is this one. They were on their way to deathbeds, right? Same thing. So D-Wave sold off from 47 to 27. I mean, think about these moves, folks. 47 to 27 in 5 days. If you're holding long, good luck. And then now you got a hope and pray session after hope and pray. And this is Rigetti. Actually, we did make some money on Rigetti reverse ETF, which is, I'll put that up in a minute. I mean, there are some tools you can short these things with. You don't have to short the stocks. Shorten the stock. I shorted it once, made money. I shorted it one more time, got my face ripped. But then I got into RGTZ, which is the 2X ETF, inverse ETF. So that went from 8 to 20 when they were correcting. So there are tools you can short these things with. IONR is another rare earth company. METC is the one I have a strangle on. Yeah, look at that one. 58 to 28 in a couple of weeks. Yeah. And I will just hold a strangle. 25.47 strangle. IREN, another nosebleeder. That actually is doing better than the quantum stocks. Did we look at Oklo? Yeah, we did. This is Joby Aviation, which is another eVTOL company. That actually looks pretty solid. ACHR is the brother-sister combo. If Joby is going to go, ACHR is definitely going to go. So we'll play that. There's a 2X ETF, and then I think it's called ARCX. Yep, 2X ETF of ACHR. I like these 2X ETFs, especially if they're optionable. Lemonade, I really like. What else? Oh, Lulu. Lulu, I'm long in my investment account. Okay, here's another stock. Okay, let's look at it. Stocks only don't go up, folks. Here's 10-year Lulu. Lulu was at this price in July of 2018. 7 years ago. You're back at the same. So you've been holding Lulu since July 2018. You didn't make any money. Okay. That's why I also say to my members, stonks are to be bought and sold. Same thing is going to happen to NVIDIA. Same thing is going to happen to Palantir. There's going to be a time that there's going to be a new sheriff in town. And, you know, stonks are to be bought and sold. Meta, 647. See, it keeps going lower. The selling is continuing. And the 2x ETF is METU. Yeah. What? That's that. Yeah, I'll probably trade that one. Make some, sell some puts maybe. Oh, you guys want to talk about a meltdown on MNAV? Here's MicroStrategy, okay? Here's strategy. Let's take a look at that. Let's compare. This is 1 year, 1 day, okay? Let's compare it to IBIT. That's Bitcoin ETF, okay? So when IBIT was, you know, when MSTR was for people who just draw charts on these, okay. For MSTR, 543 high, right here. You guys see this? Today we're 268, so literally half price. Okay, actually down 50%. What has IBIT done from that day to today? Here's IBIT, which is the 2x, not 2x, just the regular Bitcoin ETF. So that was 57, and today we're at 62. So actually IBIT is up 10%, and MSTR is down 50%. So you guys want to keep drawing charts and lines on these things? Good. Knock yourselves out. Unless you guys understand the value of MNAV, don't talk to me. I don't know. Just ridiculous. NVIDIA new high, right? $5 trillion. First $5 trillion company. NVIDIA is worth more than DAX and French market and the British market put together by itself. Looks pretty good. New high, right? Okay. How do you question it? I don't question it. Here's another YOLOers. Style love it. Actually, I do like this chart. That's why I drew my lines on this one. There's definitely consolidation, kind of a wedge flag kind of a thingamajig going on. I will definitely trade open because I don't think they've given up on this yet. And I will participate on the upside. Oscar is another one, internet loving stock. They love this thing. Now it's just, yeah, down to, actually it's coming down to a buy point here. Yeah, I'll probably give it a crack at 17. Palantir we looked at, new high. Yeah, just going alphabetically, looking through my list. Whatever is worth putting up, I'm going to put it up. Reddit. You see, I think these are all being distributed. I'm pretty sure. Reddit. Earnings were okay the day before. Yesterday's high low, and that was like 40 points after the earnings. So I don't need the excitement. Slow and steady wins the race. What else? I don't know. That's about it, folks. I'm gonna go have a cup of coffee and wait for my Beyond to expire. Oh, by the way, Fed cut the rates, right? Okay. This is the 20-year iShares inverse ETF. So if TLT is going up, interest rates are going down on the long end, 20-year long end. Fed cannot do anything about the long end. So since they cut the rates actually 2 days ago, mortgage rates are up and 10-year, 20-year note rates are up. So what happened to lower interest rates? Did not work out, huh? Okay. Tesla, last but not least. Yeah, high level consolidation. Either make a new high, we're putting a top here, and we're going to sell off about 50, 60 points on this thing. We'll just paint. Twilio, big move today after the earnings. Nice gap up. Actually, is the only one that's just staying at its high. Pretty decent. Uber's earnings are coming out next week. That thing has been high level consolidating. I don't know if it has too much more room to go, but Upstart up to 47. That's dead. Yeah, it's just no good. And last but not least, I don't know. The lower interest rate may help actually Zillow at some point. But then I have FTHM. We're at 142. I keep buying it. That's why I have 13,000 shares. I have a couple of more orders. I'll get up to 15,000 shares. So I'm all right buying this thing. I'm not concerned. Right into support here, but technically, but fundamentally, I think if interest rates do go down, if mortgage rates do go down on the longer end, I think we're going to benefit, so it's a hold. I can always manage with options. So if you have questions, please put them up. And that's it. I'll go to the front, answer the questions. Okay. I'll answer the questions. Give me a minute. Yeah, I will. Yeah, I answered that one. I answered that one. 51 expired today. I answered that one. Justin says back. Okay. Not sure what that means. SPY looks the same too. Yeah. I did look at SoFi. Earnings were good. Or they pumped the stock before, so probably in a trading range, I would say. 30-25. I mean, it all depends on the market, by the way. So you're talking about the layoffs? No, it's more than that. I think it was 30,000. It was yesterday, so I think it was 30 or 40,000. Okay, here's a comment. On which? SoFi? I don't know what you're saying. All right, here's a comment that I put up on my message board yesterday, on my members board. So Netflix announced a 10-for-1 split, right? Here's another how stupid this market is and how people are taking this type of news, right? I'm not saying you're stupid. I'm just saying. All I'm saying is splits don't mean shit. Here, I give you the news. It means nothing. It'll pump the stock for a couple of days and it'll be right back down. What does split change in a stock? What does it change? Does it change the earnings? No. Does it change revenue? No. Does it change free cash flow? No. All it does is makes the stock look cheaper. And people go, oh, for retail it's cheaper so they can participate. That's the biggest bullshit I've ever heard in my life, okay? So splits don't do anything materially to a company. Done. End of argument. There's no question about that. So don't talk to me about splits. Splits mean nothing. I really... Yeah, I mean, shorting, you mean? I don't know. It's tough. Rivian seems tempting. I didn't look at Rivian. Is it RIVN? Let's take a look. Rivian. I don't know what's so tempting about this. And it's just sideways. I don't know. Yeah, I like Neo actually better than Rivian. One of my members is up to his neck with this thing. High-level consolidation. Hopefully it's not a little head and shoulders top here, because chopstick folks will go, oh, look at this head and shoulders top. There's left shoulder, there's the head, there's the right shoulder. I'm like, I'm not even sure that makes any sense. But yeah, Rivian, no, not tempting really. How about, what was the other one that Uber made a deal with? Lucid, LCID, right? Yeah, I mean, other than Tesla, I don't know any of these. Neo looks okay. Tesla looks okay. Yeah, none of this looks tempting to me. There's 10,000 stock, folks. Go figure something else out. It's no big deal. Good question. What platform? Thinkorswim. TOS. Long time Schwab. Migrated to TOS. I like it a lot. A lot. It makes me do things that I really want to do. So. Yeah. If Joby moves because of NVIDIA autonomous partnership, yeah. I think so. I mean, look, they just moved together, ACHR and Joby. Actually, there's one stock in the Chinese world that I really like, Again, none of this is trading, financial, or investment advice. Let me put that up for you guys. Okay, same business. I like WeRide. I like Pony AI in China. They're the Waymos of China, by the way. WRD and Pony AI. We traded it plenty. So again, none of this is trading or financial advice. Just because I like it, go do your own financial due diligence. Here's Pony AI. They are truly, and they have deals with Uber around the globe to start autonomous vehicles. They're the Waymo of China, basically. There's Pony AI. Here's WeRide. I do like WeRide, actually. It just keeps trying at 12 and just getting turned back. I've been trading it for over a year now. I like these types of bases that just kind of, when they start moving, the train is on the road, just grab a handle and enjoy the ride. What was it? Let's see, my brain's mush now. Oh, ask me something about something. Hold on a second. Let me go to the front. Somebody asked me. What platform? Think or Swim? Rivian, no. Okay, never mind. Oh, Joby and ACHR. Yeah, let's take a look at that. Oh, the Chinese one. Yeah, okay, never mind. I forget. Let's take a look. Okay. EHang, EH is the symbol, or EHong. I like these types of charts. This is exactly what Joby and Archer do. So Joby and Archer are US companies. This is a Chinese company. I love these types of charts. Now, once that gets going, this is a mover, by the way. It has moved before. You know, it moves like, it goes from 14 to 30. This kind of action, base, keep testing. This thing takes 20 out. We're out of here. We're gone. Bye-bye. So I've been watching this. I don't need to anticipate the, trade. This is 3-year 1 day. And this is 10-year. You guys see this? This thing was as high as 130, by the way. See this base right here? Right? Okay, so when we come off this, off 20, we're on it. And then off 30, we're definitely on it. And we're going to 50. But we wait. 3 Ps, folks. Patience, position, and planning. Non-anticipated move. It may never come. Split helps them. Yeah, bro, Split don't do shit. Netflix did a split yesterday. I'm like, okay, it'll be right back to where it was. For Netflix, about more retail. Yeah, but retail does, okay, David, retail does not move stocks. There's this misconception that retail is moving stocks. But their 100 shares, 200 shares, 500 shares cannot move these, billion-dollar, trillion-dollar companies. Okay, it just doesn't work like that. The power of retail is definitely, last 5 years, is a lot more than what it used to be. No question. In fact, on the desk, we used to call retail dumb money. Okay? Who's the dumb money now? But retail is not going to move these stocks. Now, if you say retail can move Archer, the smaller companies, yeah, okay, fine. Or Beyond, right? Or Open, but not the trillion-dollar market cap companies. Retail is not moving. Okay, retail is not moving Meta today. Meta is not going down 100 and some points because retail is selling. No, it's institutions. Institutions still rule. But no, I mean, look, materially, fundamentally, splits don't do anything. Okay, make the stock cheaper. That's it. There is that saying that retail is going to be, moving. It's not going to happen. But again, my opinion. Institutions don't care if a stock is 1,000 or 5,000. They'll buy it. They have the money. Retail, no. It's good. I mean, it does pop. This is a new phenomenon. In my day, when you announced a split, stocks didn't move like that. Now it moves up because there's and then, go study the initial pop on every split announced, especially go do it on Tesla. Yeah, it's like for a couple, 3 days, it goes up, and Netflix, I assure you, is going to be back to where it was. By the time the split is done, which is probably a week, and price is adjusted to 100, right? You'll see the price will be right back to where it was. And, you know, so again, wonderful to hang out with you folks. Holy crap, it's 11:44. I've done this long today. Okay, I want to go have a cup of coffee. Wait for my beyond. For my members, if you're in the same position. Yes, 1,000,000%. 1,000,000%, and I'm all for it. I'm all for it. Because they have democratized trading or investing. I do have a small Robinhood account. I mess around with it. I think it's the best UI out there. I mean, it won't let you do certain things like I can do on TOS, but you know, they are responsible for democratizing investing. So with that said, invest $5 a day, $100 a month, invest, or you're going to be left behind. I'm telling you, you're going to be left behind. Because if you don't invest, don't come to me 5 years from now and go, oh, I have no money. I'm like, no, you have money. Don't go to Starbucks today. Take that $6 latte and put it in Robinhood, DCA into something. Simple. Oh, but that's my daily pleasure. I'm like, no, your daily pleasure when you DCA into something 10 years from now and you compound it is going to be so much more pleasurable. So much more pleasurable. Again, I'm not telling you to cut down, but you can find $5 a day, $10 a day, $20 a day, a week to invest. Invest. Oh, but that's not enough money. Just invest. If you want to learn about these things, go subscribe to my newsletter. Invest. You must invest. You are in charge of your financial future, not me, not government. F the government. Your parents, probably not. Your teachers, definitely not. The system, 100% not. The system is just going to send you a plastic crack when you're 18. And they keep sending it to you until you fuck up your credit, and then they'll stop sending it to you. Get with it, folks. It ain't that difficult. Just get with it. There's levels to it. But all I'm saying is invest. Just invest. Long term. Invest. Especially if you're young. Oh my God. Time's on your side, man. Invest. Time spent in the market beats time spent timing the market every single time. Okay? And last but not least, may all your shorts tank today. And may all your longs rocket. And I'll see you guys on Monday, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Happy Halloween. Please be safe out there. If you're going to drink, take an Uber. Don't drink and drive. That's it. Trick or treat. See you guys Monday.